Welcome to the Hustles Only Club. I'm your host Luke, and in today's video I'll be breaking down a trade that I took at NZDUSD. But before we get into the video, if you find any value in this video, do like and subscribe, as this helps me with the YouTube algorithm. Without further ado, let's get into the video. Now, looking at the weekly time frame, as you can see that we were actually creating low lows, low highs, low lows, low highs, low lows, low highs, low lows, low highs, and then low lows. Now the story on this particular time frame, as you can see, we were in overall downward trend. Right now, looking at this particular trend line, the story on this trend line is that every single time price touches this trend line, it pushes down. Touches about this trend line, it pushes down, touches this trend line, it pushes down. So it's just something to actually be mindful of. Now looking at the weekly candlestick, as you can see that we had basically broken this particular lower low market structure, and we're actually retesting. And again, the story in this level, or at least psychological levels, that every single time price touches it either pushed up and it broke through, came back, came to this level to retest, and it pushed down and it pushed down. As well, you can see that we do have some form of sellers exhaustion, just something to be mindful of. Now looking at the daily, so the daily is quite interesting, right? So looking at the day, or at least the previous daily market structure, we had an initial high, initial low, which then created a lower high, a lower low, a lower high, a lower low. We then broke through this previous lower high and created a higher high. So that's basically signifies a break of structure, right? So created a higher high and then a higher low. So my overall projection on the daily time frame is that we are going for, or we headed into a buy. So that's just something to be mindful of. So on the daily, I'm in a buy. Looking at the daily market structure, again looking at this particular level, which is again a psychological level of 0.600. We had a previous level of support. Market then broke through this previous level support, came back, retested it, and it pushed down, it pushed down, it pushed down. We had a lot of buyers exhaustion at this level, and as you can see, we also had a bearish engulfing pattern. So that's just something to be mindful of. So I'm gonna just mark this as a daily area or daily level of previous level of support. Now is testing as potential resistance. Now looking at the H4 time frame, H4 time frame is quite interesting to me, guys. So we initially had a level or area of market structure, right? So here we had a higher low. Market then broke this previous level of market structure, this higher low, creating a lower low and a lower high, a low, a lower high, a lower low, a lower high, lower low, lower high. Now because the market was in a overall downtrend, I drew this fib, this downward trend fib, and this was my point A, this was my point A, this was my point B, and ultimately this was my retrace or pullback. So as you can see, we had this impulse, correction, and then overall continuation. Once the market hit my negative 61.8, plus we had divergence as well, my anticipation is that the market now could potentially reverse and push up and go into a buy again, which then aligns with my daily time frame. That on my daily, again, I'm in an overall buy. So we hit our negative 61.8, we had divergence as well, so I do anticipate an overall push. Now looking at the daily, my H1, excuse me, so my H1, previous H1 structure, I had this impulse, correction, continuation, right? This was my overall trend line, and then we had an overall break. This was not a break of structure, but we actually broke this trend and retest, and then had an overall continuation. Again, the market it basically hit my next 61.8, as you can see, and then we overall had a continuation, which is why when the market was actually here, I then had an analysis that this was my analysis that the market will come back to test this negative 61.8 as well as this monthly foundation before it actually reverses to this level again, which not really comes to this level next 61.8, but again, as you can see, it did reverse and pull back. So this was my 1 hour structure. We then broke through, retested, and then came back, as you can see, based on this fib. This was my market, this was my fib, so this was my point A, point B, point C, and this was my overall projection, as you can see. Once that happened, once that market structure play was finished, once it hit my negative 27, I drew this purple trend line. As you can see, this was my point A, point B, point A, point B, and market then broke below, creating a lower low and a lower high. And so I had this overall projection based on this fib. This was my overall target right there, which did not really get filled out. But something to mention, right, that actually happened once the market actually broke this previous higher low, lower high, it created a higher high and a higher low, right? So when the market came to this area, right, this was not only a broken level of resistance or market structure, it was now testing it as support. Not only was it testing as support at this particular level, also was at a monthly foundation. Now, interestingly, we had divergence at this area. Again, as you can see, the market is basically going down, while on the RSI it's actually headed up. We also had a descending channel towards a level of a support level. So we had divergence as well as the descending channel, and it was literally sitting at a support zone. And so this was our NFP and we had this fib as well. So based on market structure, we had this impulse, correction, and then continuation in my negative 27. And obviously I was anticipating for buys. Didn't really get into this play, but I was actually looking at this daily zone. Again, the story in this time frame is that, at least on this particular level, is that every single time price touches this particular zone, it's sold. So basically every single time price touches it, pushes down, it pushed down, it pushed down. So when the market actually got into this level, what I was waiting for was basically just a break of structure, right? So I knew that if the market actually just broke structure, I would then get into my sell. So that was my first projection, or at least anticipation, for me to get into this particular sell. Not only that, we broke through this particular level of resistance. We broke through it, and I was waiting for the market to actually come back and retest. So we broke through this previous level of resistance, and I was anticipating the market to come back to retest, at least for a push up, because again, on my H4, right, we hit our next 61.8, and I was anticipating for continuation. So that was my first initial bias. Secondly, we had broken this previous level of market structure, creating a high low. We also had this ultimate fib. So I knew that the market, for it to actually continue, we first needed to come back to this level. Market then will find some form of support before it can actually continue. Now when the market when the market came to this level, what I saw was that we had actually divergence. As you can see, the RSI is pushing downwards, while market structure PA is actually pushing up. We came to this level, and as you can see, we had bullish or buyer's exhaustion, and we had a bearish engulfing pattern, or bearish engulfing candlestick, which then engulfed. You can estimates I think like 10 candlesticks. So that was just enough confluence to indicate that the market will actually sell. Once that happened, I moved to my 15-minute time frame, and then I just looked at market structure, right? So we had this initial buy, initial high, this was a low, then this was a high low, high low, and then we had a high low, and then a high, and then market structure broke through these previous highs. So that basically signifies a break of structure. We had a lower high being created and then a lower low. So when the market came to this level, right, or even this level, right, because this was, excuse me, because this was a previous broken level of market structure, and it came back to retest that. So I scaled down to my 5-minute time frame, and then the only thing I was looking for was exhaustion. So when the market came to this previously broken level of support and was now testing it as resistance, right, this was the support area level and this was the resistance level, the market then printed out he came back and basically had a lot of buyers exhaustion, as you can see. So that was sort of like my first, so let's try to summarize the confluences, right, that we have. So the story on the H4 time frame, right, is that H4 zone, in fact daily zone, right, is that every time PA touches, it's sold, and we're basically looking at this zone or area, right, this zone, actually it's a H4, so this zone, every single time price touches this zone, it's sold, right? So let me just edit that. So H4 zone, every single time price touches this H4 zone, it's sold. On the H1 we had a bearish variation. As you can see, the market did try to push up, but we had a lot of bearish exhaustion and bearish momentum at this particular candle, at this particular zone area, which then engulfed the previous 1, 2, 3, 4, 5, 6 days, so nearly week. So on the H1 we had a bearish variation. 3 we broke through. This is basically a 30-minute market structure. So this is a 30-minute, so we broke through 30-minute support level, and basically did not really retest. So I needed the market to actually, so I anticipated the market to actually come back and retest this level before actually continuing. So broke 30-minute structure without retest. 4 on the 15 minutes we had a break of structure near the H4 zone. So we had this impulse correction, continuation, broke structure, creating a lower high. So I was anticipating for a continuation, right? So on the 15 minutes we had a break of structure near the H4 zone, and we had a 3-leg extension. Now if you look at my previous candle video that I dropped, I explained the 3-leg extension. So a 3-leg extension is basically just a validation for a break of structure. So for instance, we might have a bearish trend, right? We have this impulse correction, continuation. and then the market creates a higher high. So most probably, right, for the most part, most traders will actually think that once the market actually creates a higher high relative to a lower high, that it means that the market has actually broken structure and now it will trend high, right? Create impulse correction continuation, which sometimes does happen. But what the market can do is actually can fake out. So it might create a high high, a initial high, a low, then a lower high, lower high, lower high, low, and then it creates a high high, and then it continues in that bearish trend. And so basically you might be faked out, because most traders will basically want to enter once the market actually comes to this region or zone, right? However, a 3-leg extension will actually give you that validation that the market has actually broken structure. So we might have again a bearish trend, and then the market creates a higher high, a higher low, and then this is the high high. So we have, this is the first leg, this is the second leg, and this is the third leg, and now you're waiting for this fourth leg and for the market to actually print out a bullish variation before it can actually trade higher. And so this will basically be a much more probabilistic trade for you to actually enter, right? Because now we have printed this 3-leg extension, this is the fourth leg, and now you basically enter based on the market actually giving you a variation. So if you look at this, right, this is what we had this break. So this is the previous high low. We had this low created first leg, second leg, which is the lower low, and then lower high, and then there's the lower low. So this is a 3-leg extension. Market came back to this previously broken level. So here I was anticipating for this continuation, right? So let me just add that, and we had a 3-leg extension. Yeah, we had 3-leg extension, 5 on the 5 minutes, right? So 3-leg extension. So on the 5 minute, right, we had seller's exhaustion, right? Seller's exhaustion based on these previous 3 candlestick before the push towards the downside, right? So on the 5 minutes we had bearish exhaustion, right? Exhaustion. And then 6 on the 5 minutes as well. Now again, something to mention is that on the fib, right, on my fib, -61.8, it always means a reversal. As you can see on the H4, right, just after the market had hit my -61.8 on my H4 based on this particular structure, we had this impulse correction continuation. Once the market hit my -61.8 based on this fib right here, the market -61.8, the mark reversed, right? Even if you can look at this particular structure right here, market hit my -61.8, it did what? It reversed. So on the 5 minute time frame, right, on the 5 minute time frame, once the market actually hit my -61.8, I was already anticipating for a reversal. So also on the 5 minutes, we actually hit our 61.8% reversal level. Now there's the 7th confluence. Now on my 1 minute time frame, once the market actually printed this bearish, as you can see, we had a lot of bearish variation candlestick. Once the market actually came here and gave me this bearish variation, that's when I entered. So bearish, so 1 minute, bearish, variation at the zone. So we had basically 7 confluences. I had 7 confluences, which then gave me the green light to actually enter. And my target was, to be honest with you guys, this was my target right here, and then I somewhat got out once I saw that the market actually broken somewhere here. That's when I got out. So guys, without further wasting your time, we have reached the end of the video. And again, if you did find any value, please like and subscribe. Thank you. We had a 3-leg extension. Now if you look at my previous